All right. Good morning, traders. Good morning. Good to see everybody. Good morning, Don. Morning, FP. Hello, Sandy. Good to go. Thank you. Hi, Vladimir. Good morning, Kyle. Hi, Stephen. Good morning, Bob C. Good, good energy, good crew. What more could you ask for? Forgot it was a short week this week. Did you guys remember that? We're gonna have to make an adjustment to the schedule. It's not much. We'll cancel Friday morning. Um, and unless I have something crazy on my schedule, I don't think I do. We will do a week. Yeah, we will move the Friday afternoon session to Thursday afternoon. So we'll still wrap the week up together, the last hour of the week. Uh, and we'll still uh, do our Thursday night. So, good morning, Mike. Good to see you. Good morning, Victor. Good morning, Lee. Bit Boss. I love it. Good morning. Lots of listening. Ask questions. Welcome to the group. It's a very welcoming group. You'll find if you ask a question like in the chat, a lot of times if I don't see it, someone will answer it. So it's a great group. Let's go. Yeah, let's get started. Good experience. How the market, it's good. You're right. And it was interesting. Steve C in our Sunday session was we were talking about the trading plan. He's like, well, if we're trading less, that's a great time to be working on your plan. I'm like, it's exactly right. So anyway, officially, good morning. Welcome to Options Income Launchpad Monday market kickoff. My name is Scott. I just passed right by that. As always, this is for education illustrative purposes only. Nothing we do is intended as a recommendation to buy or sell any financial security or product. We're not brokers or advisors, so we don't give personalized investment advice. Any decision you make based on anything you see here or get from us is done so at your own risk. Yada, yada, yada. Oh my gosh, my clicks are like fast. What is going on? My mouse is acting up. Let's dive in. Opening market. We'll look at the calendar and the posture. We'll talk about trades. Small list. Market's in an interesting place. Let's go talk about it. Yeah, the futures. It was funny because somebody last night or somebody in yesterday's session was talking about the futures starting in a negative place, and they were right. And around I don't know 5-6 p.m., I go look at the futures. They're down about 1%. Whatever that person said, they were even worse then. I hadn't looked. And then they were down about 1%. And then right before bed, I look and they're down about 0.7%. And then, my dog wakes me up at 4 in the morning and I have to take her out. And I look at the futures and they're neutral, they're flat. I'm like, oh, look at that. Got it all back. And then this morning I come in and so it's been a pretty steady swing. And you can see here they ended up quite positive. Um, quite positive. Markets opening up 0.65 on the S&P, 0.74 on the Dow, 0.5% on the Nasdaq. Not quite as much as not quite as much as the futures had indicated. Let's go actually Let's jump right in and let's take a look. Yeah, well, it was a pretty immediate, gapped up, pretty immediate. Kyle says, for me, this is not positive, rather just an oversold bounce on low volume. Trend is still down. Um, well, and yeah, right. His point, and I agree with this, is we don't just be like, oh, look, it's up this morning. Now we're bullish. Of course not, right? In fact, to solidify that point, look at our posture. It got worse. This is what I anchor to. It's like, hey, fundamentally, as I evaluate these different parameters, each one on its own merits, no bleed over, no extra things coming in, just looking at these core components. Empirically, the market has deteriorated and continues to. We saw a couple of weeks of stability, and then immediately just like back into the drop. And so, yeah, um, this might be, if you're looking for bearish trades, a little pop up as a potential entry. Um, I agree. Yeah, we can't get dissuaded by um, the short term fluctuations as much as we need to anchor to having a predefined posture. Now, it was a positive open, meaning it opened, the buyers opened the market clearly, right? It opened up. Whether or not we interpret that as, okay, I'm going to go now put bullish trades on, well, that's a whole different ballgame. So what happened on our posture? Long-term trend deteriorated. Short-term trend continued into negative territory. At this point, our only bullish score left is long-term trend, and it's barely hanging on. I'm at a 0.5. The Oracle is at a 0.75. The Oracle is now continuing to open its, or actually it maintained. We dropped about the same amount. I went 15225, but it's a little bit more bearish than me. Interestingly, and this is very interesting to me, but I haven't. Is anyone more bearish than this? I feel like I'm the most bearish in the group, as far as my, not like I having a bearish opinion. I'm saying my score is empirically lower than most everybody else. Is that true? Someone correct me if I'm wrong. Who's lower than a 2.5 or 2.25? Still somewhat bullish. Well, now hold on. What's your score? Because saying I'm somewhat bullish without your score could be you're just kind of saying, like, I still feel, that is not bullish. That is the bearish end of neutral. Not deep into the bearish end of neutral, but it's in neutral with a little more bearish than not. I I am deeper in the bearish end of neutral, starting to get close to like a firmly slightly bearish, like the low end of actual just bearish. Right? Why does that matter? Well, if I'm neutral, what trades can I make? Yeah, bullish or bearish. I'm still have a bull list. It's just small. I'm still willing to take bullish trades. Very selectively finding leaders who are still maintaining uptrends, staying above their 50-day moving averages, higher lows, higher highs. Watching for core market leading stocks, top stocks out of growth groups, like financials is one where I'm like, ooh, there could be something developing here. Some people think that that's me being optimistic, but it's actually not. I'm just like, hey, look, eventually a couple of these growth sectors that are, down, really been struggling, are going to make a fight, try to make a play. Um, yeah. So, but it's early on a Monday. Trading the charts as we, that's it, as you see it. What do you see? The one of my most favorite. Oof, look at that. The sellers are just kind of like immediately coming back in. One of my most favorite quotes that I would put into like trading presentations that I give, um, said, "Learn to recognize the difference between what you think, what you feel, and what you see. Think, feel, see. Listen, listen to yourself. I'll actually catch myself sometimes where I'll be like, I think that, oh, right, like, wait, what do you mean you think? Learn to recognize what you think, what you feel, and what you see, and then throw out what you think and feel. that's the last step. And then throw out what you think and feel. What do you see? If that was like a skill that I could impart early into traders, if I could have imparted that early into myself, for the love of all that is holy, I took way more, way long. We all do it, right? We all look back and think. In fact, it's Kyle just said, took me 2 years. I'm thinking to myself, that's pretty fast. I look back at mine. I'm like, man, it took you a while to get there, buddy. Why? Why? I don't know. Stubborn or not good resources early in my learning. I learned trading mostly like, trial and error. maybe maybe read an article. It wasn't a lot. Anyways, what do you see in XOM and OXY? Yeah, let's dive into those. You can see here. Let me jump back out. Let's talk about oil, energy. And here's the deal that I would say: OXM, OXY, they're the same thing. So you're, I don't know why my Alexa starts to like listen in without me even saying Alexa. It creeps me up. Did you guys hear that? I don't have a second person in here with me. What I was saying was OXY and XOM, or throw any other oil stock in there. It's not like you're thinking, which one of these is going to move? They're both going to move, right? They're both going to move. And if they drop, they're both going to drop. It's not like oil's going to drop and Exxon's like, we're going to find a way to still sell our oil at a higher price. And therefore, our stock is going to keep going higher while all the other oil stocks drop. Someone else give me, well, so here's what I'm going to tell you. When you say, if you're in both, here's what I want to say: be careful, because if you have, let's say your position size is 1%, right? Well, if I put 1% in XOM, 1% in OXY, and then another 1% in PBR. Doug said it right as I was thinking about it, right? And then, right, so as I stack these up, that's 3%, right? And so what I have to just realize is, even if I have multiple different, they're all correlated highly enough that they're all going to rise or fall exactly the same way. So if you say I'm in both and I'm up, I'd be like, of course they're both up. 100%, right? And so it's a funny thing because I was teaching a trader one time, and I'm like, yeah, he's been paper trading for a while. Just needed to get skin in the game, and so we established a position size amount that was reasonable. He's like a couple $100 maybe that he would lose if he did. It's like, just gotta just pull the trigger, man, get a trade on. Then I come back and he's like, this is a while back, when there was a bigger pool of these, but um he's like, yeah, I put 4 trades on. And I'm like, what? That's amazing. Well done. I'm like, let's talk about it. What are those trades? Um and uh he said I put on Lennar and DHI, and he went through this Centex. It was home builders, right? And this is, I mean, they were a strong group at the time, very similar to oil being a strong group right now, specifically reacting to the conflict in the Middle East. Um, and so the um the point was is that he then put 4 trades on where I'm like, oh, the problem is this is one trade, not 4. It's one trade. They all behave exactly the same. They all looked good for sure because they all had the same signal. Um, so why haven't we been looking at these? Well, we have. I'm always a little reluctant to lead the group into news reaction. I mean, I'm going to talk about it, but there's as much as it's been going higher, because it's reactionary. Um, I mean, it's not like I'm against it, and certainly we've talked about it, right? But as far as like when you say why haven't been looking at these, you're asking why they're not on our watch list. And again, we could, right? But I would put one. We don't need to look at 7 different oil stocks. I need one oil stock that has the highest liquidity in the options. Does that make sense? This is a trader's perspective where I don't feel I'm not getting any diversification. Doug, I think you're missing what I'm saying, right? Like spreading risk across 6 different charts that all look the same isn't really, you may as well just put 6 times as much in one of those and not look at 6 different charts. They all behave exactly the same way. So realistically, um, diversification. I like that. I've never heard that, Kyle. That's hilarious. Good stuff. Um, but that's kind of the point, right? Where we're like, oh, I've spread my risk across. I'll see it in gold. They'll have like 7 different gold stocks. It's like, oh well, I did this one, and then it's miners and gold, and then I agree. Great, get some money and energy. It could be XLE, it could be XOM, it could be OXY, and no, I'm fine with that. But I think you're missing what I'm saying. Is we don't chase. That's like saying when there was meme stocks, we had meme stock. We never traded a meme stock. Am I saying, hey, is there money to be made there? Sure, you could. That's not fundamentally following the principle. So if it's swing trades, great. But when you look at this, other than maybe right, let me get some drawing tools. This is a good conversation to have. Right, is you had kind of this consolidation, and then that thing turned. This was definitely strong back here, right? But that was Starting to bounce, another entry there. But right now, if you said, hey, do you think XOM looks like a good opportunity? For me, the answer is no, right? If you're in it, sure, it looks great because it's up today. But if you're not in it, would I put a trade on now? Um, no, because I would have to first say, where am I wrong? I think if I think it's going higher, if I say, oh, I think it's going higher, I have to say, where am I wrong? Well, I'd have to wait for it to at least drop like halfway back through here, right? So this is now my risk. Well, I'd like to get at least 2 times that. Boom, boom. So yeah, right there. So I need to think it's going to get to 190 without dropping back down to 168 without this type of a pullback. I mean, that's a lot to ask for, right? You're asking for this because it's already done this. And we already had this run up, which was not quite that big. So for me, it's not that I don't think it's going higher. I think there's nothing in it for us now. It's about tradability. Um, there you go, Stephen D. That's a great way to put it. The trading side of options is not to pick stocks for us, as it is to buy or sell, teach us trading techniques, evaluate. Amen to that. That's a phenomenal way to put that. Difficult to maintain that angle, right? And I agree. And it's very susceptible to the other side too. We'll see that same thing. So anyway, it's not like it's we'll go into we'll start talking about charts and people will say, why don't you use this technical indicator? I don't have a reason. I think that's the wrong question to ask, right? It's not why are you not doing something, but what are you focusing on and why are you focusing on that? There's a lot of ways to make money, a lot of different ways. There's a series of books called The Market Wizards. The first one was called, I think the first one was called Market Wizards, and then Stock Market Wizards, and then New Market Wizards, and then Hedge Fund Wizards. There's a number of these books. You can see the response as soon as I put them in. They're phenomenal books. Why? Because what you're reading about is, they're guys who trade anything you can think of, commodities, forex, options, futures, stocks, now even cryptos. There are people who are swing traders, scalpers, day traders, long terms, people who are technicians, people who are you look at fundamentals. So they're showing you that there's a lot of different ways to string together. Where do you find the common ground? That's the secret to those books. Is where's the common ground of these success? And it's always a very similar thing. They started thinking about signals and systems, and then they realized, no, I need to work on my risk, and then they realized, no, I really need to get my psychology in place. And then they said, if I could, right? So the common thread is, if I could do it all over, I would switch it, get my psychology right, my mindset in the right place, get my risk management all squared away, and then move forward and build my systems and right. And it's like, that is the foundation. Anyway, phenomenal books, but I don't have good reasons for why are you not doing this? Well, I don't know. Right? Why are you not using one of these 1,000 indicators that exist? Because I've never studied that. I've never put it into place because I'm busy, working on my system. That yes, I certainly watch things that come up like, oh, look, there's this is happening, and what's the impact going to be? And obviously, whenever it's in conflict, the immediate impact tends to be on oil. Conflict in Russia had an impact on oil. Conflict in Iran is going to have an impact on oil. And the other side of that is the other side of that is what um, what happens to the rest of the market. But yeah, no, I don't, it's not like I'm saying, hey, you shouldn't do this, because we're not talking about exactly that. It's what when you're trading that, how are you determining your trigger? That's a consistent rule. What's your trigger? What's the setup? What on the chart? Because if we're just saying, whoa, I saw some news and oil's up, I don't like it. I want to take that, go to the chart and be like, okay, what kind of a trade is that? Is that a continuation trade? If I do a continuation trade, I need to find an entry here. I need to put a stop here. I need to have an expectation that it can get to here, and it needs to follow a method, right? So I'm good if news triggers momentum, great. Now put that in a system, run it through the rules, right? Put it in a system, run it through the rules, and that's what we work on. That's right now we're back to section 1 of our trading plan. That's us. Strengths, weaknesses, commitment, discipline, all about who's driving the ship. And then we work on how do we forecast the market. We do it the same way, and we orient and then step 3, trading systems. What are the rules? What if I have a breakout system? Here's a breakout. Here are the rules. If it's a bounce trade system, here's what it looks like: entry, setup, trigger, stops, target, time frame. How do I man it, right? Like, what are the rules? Otherwise, I'm shooting from the hip, and I don't want to shoot from the hip. So whatever. So right now you're saying, hey, what's the trade here? Right. And you can see already even this is pulled back from its high. But that does that mean, what's the rule? If I get in here, I need to have a stop. And that sets my risk. And now I need to be able to justify that risk. So where's my target? Is my target twice as big as my risk? If not, we're kind of moving into like, what am I doing here territory? And so, yeah, if you're ever like doing something and you're like, Scott's not, look, have rules, execute those rules. Certainly the conflict create, and if it ends quickly, there'll be downside potential as well, where you think, oh, I'll buy some puts maybe and see if I can't ride it to the downside. And then you might find that there's times where the news is back and forth enough that you're like, wait, I'm starting to get whipsawed here. I think I'm going to take a step back from this. Okay. What do you see? That's what it boils down to. Charts are history that can be interpreted incorrectly or correctly. Well, sir, certainly. Um, in fact, you said puts are looking good. We put a put on Friday, right? Speaking of, let's go take a peek. Market's up. What do we think? Well, we're probably seeing things test a little bit as well. So, but everything is history. It's a funny thing, right? You'll hear market people who look at fundamentals. They're like, oh, market technicians, you're looking in a rear view mirror. They have this clever little phrase. You're looking in a rear view mirror. And I'm like, you know, a fundamental, a person who looks at fundamentals, what are they looking at? They're looking at company data, earnings, and sales, revenue growth, right? From what? Year over year. What year over year? Last year? Over the year before? That sounds like you're looking in the rearview mirror. Like, what do you mean? Everything we look at is historical. Right? It's about what's our ability to extrapolate concepts of what the future may look like based on the patterns, we're all doing the same thing. Interestingly, right? They're saying, oh, well, if I find something that had revenue growth from here to here to here, then I think it's going to continue here and here. Oh, you think it's going to, but you don't know. You're still predicting the future. Anything could still happen. Whereas we are like, oh, we have a trend and it went up and then down and then up and then down. So we think it's going to go up and then down. Great. Can I get at least a 50-50 on that? I think so. Can I get 2-1, maybe even 3-1 on that? I think so. So if I can just get myself into 50-50s, getting 2 or 3-1 over and over and over, trading in line with the market, trading in line with trends, find the momentum, stick with the momentum. If I do that over and over and over again, I'm going to trade for a long, long time. Right? That's my goal. Right now, when you think about, what is my pursuit right now? Am I pursuing profits or am I pursuing more safety? More safety. I'm always going to try to trade profitably. Of course, I'm going to trade. If I put a trade on, it's to make money. But the amount that I'm doing now is less than it was a month ago, which is less than it was 2 months ago. Why? Because the market has deteriorated. It's a worse market. I feel like it's, this looks fine. You can see it pop back up a little bit, but still, yeah, we'll keep an eye on it. Let's go back and look at where we are in the range. This has been a good conversation. I think it's the right conversation for this market, right? Is reflection. How have you done so far? Let's just peek in here. So you can see we basically just sort of established a 1, 2, 3, 4 downward opening range and then continued after that. So we've almost completely closed the gap that we started with. So the buyers aren't real strong. So Kyle being a little suspicious in the beginning, like, yeah, it's warranted, right? Now, back here, there was some choppiness still, right? It's not like markets didn't chop, but overall, we were oriented in a much more bullish fashion. And then it just sort of turned sideways. And now you can see it's clearly gone into a different type of a market. And again, when did we see a pretty good indication of that? I would say by February 15th. Actually, I was looking at the model. The model was slower. I would say for me by February 8th, I dropped a full point on February 8th. Something from the 1st to the 8th caused my posture to drop an entire point. And the next, another point again. So the 8th and the 15th, I'm thinking, whoa, this market's fundamentally seeing something differently. So the 8th is here. That market looked pretty bullish still, but something happened within the context of the market where it's like, oh no. So my posture drops a little bit. By the 15th, that is a couple more days, 1, 2. You can see even here, it still looks like you're like, what do you mean? It looks okay. It looks like it could even be setting up bullishly. And I'm sure I still took bullish trades. Less though. We started talking, hey, this market's deteriorating. What do we do with that? Take smaller trades, take less trades, ease back your risk. And you can see from there, it just sort of fell into this. Now, was it enough that you're like, now that it's dropped to here, it's like, oh, should we have done a bunch of more puts? Here's what I want you to understand is if you would have done a bunch of more puts there are other times, I'm not going to go back and trace them immediately now, where if you had done that before it crossed below like a 2.5 or a 3 market score, you would have ended up with puts on while the market reversed, and then you'd be scrambling to close puts while you're missing opportunities to put on calls. There's always this sacrifice. So your job as a trader is to find your balance. How comfortable am I shifting from calls to puts and puts to calls? I know traders who do it no problem. I know traders who really struggle with that. It's about right. That's where I saw someone put a something about it's about your personality as well, and I 100% agree. Right. That's the funniest thing about trading. If I took my system and my rules and I'm like, I'm going to give this to you, someone might be like, "Ooh, that's amazing," but it doesn't matter. That person that I gave that to will not, cannot execute that system like I do. Won't happen. They could try. They could try, and as they start implementing it, they will learn on. Whoa, I see it a little right. I mean, it's the funniest thing. Having coached for as long as I have in systems, one of the first things people start thinking is, how do I get in front of the system? What if I get here instead? Right? It's inevitable, man. it's a, and and so everybody has to have their own system. You can't trade someone else's system. I can't. I mean, it's and so that development. That's kind of what Stephen D's point was, right? Is you're here to kind of get some to learn, to see. We share. We look at watch lists together. We find momentum. We talk about market conditions, and then you try to find those rules. When I put trade alerts out, I just try to put out like, hey, here's a potential stop area. Here's a potential area for a target, second target. And this is the way I would look to structure a bounce trade versus like if it's a breakout trade versus if it's a continuation trade. How do we determine a trigger, a stop, a target? How do we then alter these things? If I'm an impatient person and I'm trying to get in sooner, if I'm a more conservative person and I want to wait for more confirmation, then we start to dial in some of the subtleties, the nuances of the trade. Anyways, so and Doug, be careful of hindsight bias. A put beginning 3 4. Now that would have happened. Right now that would have happened, but there are certainly other times where it's not. So I'm saying, what's the rule? So if you say I should have put a put on 3 4, what's the rule? Not in hindsight, it's dropped from there. What is the rule? Because then what I would do is I'd say, great. Now let's take this rule and apply it to other times. And let's find out how many times that rule succeeds or fails over a 5-year period. What are we talking now? Back testing. Back testing. Right? Where we say, hey, you know what? Let's test this. And then we forward test. We say, now let's make sure that because what we're doing is we're developing confidence in that rule. To be like, not like, ooh, there's an attack and I'm going to do this and then I'm going to react this way. And to me, it's not about, I agree. You miss every shot you don't take. What shots should you take? Every shot that meets your rules. If it meets your rules, pull the trigger. Pull the trigger. Absolutely. Pull the trigger. If it meets your rules and if it meets current context, the setup of contextual current context of, well, this market's a minus 2.25. So what are you going to do with that? Oh, I might be willing to have a few. I'm not going to have 10 or 12 bullish trades on. I'll have a few. So if I already have a few, then I'll be like, ooh, actually, now I'm not going to just take every bullish trade that I see come across my plate because that's against my broader portfolio rules. But so I have trade rules, which is like, hey, here's this trade, but I still have to check and balance the trade with the portfolio. Because if I already have three oil trades, does it make sense to put a fourth oil trade on? Not if I'm trying to maintain risk management on a sector by sector level by saying, hey, don't over correlate in any one sector. That's a good rule. That's a portfolio level rule. That might then dictate don't take that trade level because the only way that we're going to generate the consistency we're looking for is like granular level rules like this. Um, such a great discussion today. I love this. Well, now here's the deal. Context and bias will have a little overlap, in my opinion. Right? Where if I say, and I think we try not to let it, but there's always going to have some measure of it. Right? The impact social and cognitive biases have on us as traders. I mean, they're biases you don't really understand until you're forced to like flesh out and be like, oh God, holy crap, I didn't realize I do that. So when we find our market posture, there is a bias. It's an intentional bias. I'm intentionally biased to some extent to my posture. I try to be as objective as possible, but we see it. There's still some measure of opinion that we have to be like, I have to choose this or this, and it's my opinion which one I choose. So there is subjectivity to it. We acknowledge that, but I agree. Um, Without rules, you're always jumping on a little late, trying to ride the wave of others. You'll always get, yeah, I love that. Okay, 100%. 100%. Okay, let's just take one more peek at the inside of this. Ah, okay, where's my day traders? Are you seeing this as the bounce? Or are you seeing this as I want to see if the buyers are able to get this thing back up? Remember, now this is a slightly different but still relevant moving average. If this fails to get back into this area and we roll back over, we could see more selling pressure. Let's keep an eye on this one. Okay. Let's go through our list of things. Oh, look at Alcoa. Alcoa with a 11% day. This was one we were looking at, and then it just sort of got beat up down here. I don't know. Again, in hindsight, you're thinking this was on our list. We saw this, but at the same time, you can see this had really oriented itself to the downside. Oh, is that what happened? News based, Stephen. Thanks for the update. Apple down. Archer Daniels. Ooh, Archer Daniels. Um, got there. Applied materials down. AMKR is actually one that I'm looking at. Let me see where my list is. I have Archer Daniels on my list, but I need to pull back before anything. AMKR. If what? If it doesn't break below this 100, this is my old high or low, pardon me. This is my old low. If this thing can stabilize and then all of a sudden get a little bit of momentum, then I might think, okay, there's a higher low. I might see this, which realistically should put me back, I would say near this 55 level, right? Like, something like that. Um, oh, Gabe, that's a great question. Gabe said, if you have a minute, I do. Why the two stochastics? Because I put this on in an illustrative capacity not long ago. I don't even remember what I was trying to illustrate, just the speed of like a one versus the other. And then I forgot. I haven't even, it's the funniest thing as you mentioned it and you talk about biases. I literally didn't even, this didn't exist for me. All I saw was my standard chart. didn't even, I didn't even realize it was there. Um, so it was there to kind of, this was like a 7-3 versus a 14-5. And you can just kind of see like, hey, something, which one turns first in certain circumstances, right? Like, am I getting in a little bit? One day can make a big difference. And to me, the 7-3 gives me that day. That's what it was. So thank you for highlighting that. And I will now remove it to eliminate the confusion. Okay, let's keep going. Yeah, it looks much cleaner now. Now it's funny now that you mentioned it. I was like, holy shit, what is that doing there? Get it off there. Amazon, no. APH, a lot of things lackluster. ASX, you may still have a piece of that. It's up a little bit today, up 1% today, but it's just kind of, it's got to go. The thought process when we try to catch a bounce is if it hiccups but doesn't break, we still give it time, but we still need that bounce to show up. And yeah, there it is. That's kind of what we're looking at there. Well, thank you, Gabe. I appreciate that. It's a nice thing to say. Uh, AXP down, though, for me, financials is one that is potentially giving us that like, ooh, is there something developing? Baba's still well down. Not Bank of America, not BCS, not Bud. City. City's giving that early, right? Like here's the lows, here's the consolidation down, and there's that. We just need to, it's subtle a lot of times, right? It's like, hey, that is the first real good sign of buying we've seen. Now, if the sellers just drop it all the way back to the old low or obviously worse, then it's like, meh. But if it can hold and stabilize in here and then give us that, then all of a sudden we're thinking, hey, that's where we start to see things like this. That's where we start to say, oh, and now here's what I'll tell you. If I were to say draw something like this. Wait, it just locked me up. What just happened? Hold on. Oh, there it is. If I were to draw something like this, what would you call that pattern right there? Anyone want to take a stab at it? Yes, Stephen. Doug says choppy. It's an inverted head and shoulders though. Right? Inverted head and shoulders, if and when it breaks the neckline, that's the full completion of the reversal. Shoulder, head, shoulder, if it completes, which what I'm pointing out to you is our little pattern actually oftentimes does equate to a trading the right shoulder of what we're hoping becomes a confirmed head and shoulders pattern. Interesting, right? sometimes sometimes there's not a shoulder. Sometimes it comes all the way down to here. And then we're like, oh, that's a double bottom. Or there's three of them, and we say that's a triple bottom. These are all very classic reversal patterns that show themselves out in a pattern that equates to what we look for that establish new trends. Like, hey, have the buyers done enough to convince us? And in most cases right now, the answer is clearly, obviously not. But we're starting to find little places where it's like, ooh, what about this? CF is fertilizer, obviously impacted as well by the situation in the Middle East. It's at the bottom, which is concerning. But I'm looking for like, hey, at what point do we see some sort of reversal in there? Yeah, no, I agree. It's concerning still. Cisco. I like Cisco right now. Cisco had a breakout. Now the sellers are coming in. Looks like a big red day, but there wasn't that much volume. And if it slows down a little today with still less volume, and this thing can make a bounce, and I'm going to give it, 50 to 100 grace. I'll let it come all the way almost back down to this moving average because I'm kind of thinking anything above these lows here. If it comes in and turns, yeah, I think I don't think it would get back to there, but maybe it gets up to 85 in the first run. That would be an okay trade to try to pick up on. So I am still looking for some bullish things. Where do I see some things that are showing strength? Delta is showing a little bit of strength. We have earnings. Be careful that you don't have much time. Kyle, good to see you. Here's the Dow. Here's Dow Chemical. I would have been a top. Here's the deal: is this was we were kind of watching this. It was a big entry candle. You would literally only be at 1-to-1 to that trade right now. I kind of wanted to take it. I don't remember if it had the Heiken Ashi. What day was that? 324. I think it was 325. The Heiken Ashi. Yeah, it was 325. I don't know. We wanted to go back to the well on that one. Okay. Ford down. GE down. Gold iffy. General Motors. Google down. Goldman Sachs like Citi. A couple of financial leaders have done this little thing, right? And if it can hold and turn, I'm a maybe. I'm always thinking, the thing about financials is when it does reverse, the first move tends to be the fastest, biggest, and then it slows down after that. So it's like I want to catch a piece of that if I can, without a doubt. Home Depot. Well, you can see what we're looking at in this market. A lot of downs. Some are starting to turn sideways. Lumentum, staggering beast. I don't have any for a while. MasterCard down. Meta looks horrible. Now, Doug says puts. I agree. But now, when things are down here, do I have a trade where I could say, I'm going to put a put on and expect that I could get in here, put a stop here, and it's going to drop to here, and there's my 2-to-1? Not for me. Now, if these things rally up to this point and rolls over, then do I think I could get a stop here and it could drop to here, and now I'm getting 2-to-1 in line with this trend. Yes, absolutely. I think that. So that's where the rules come in. It's got to do what? It's got to move into a position in order for me to get my ideal setup, entry, opportunity. One of my favorite traders to quote, who was interviewed in those Market Wizards book, his name was Tom Basso, nicknamed Mr. Serenity. He says, my trading style is this. I wait until I see a pile of money in the corner, and then I go over and pick it up. Good stuff. Waiting, patience. Is it the right opportunity? So if your rules say, yes, this is the right opportunity, what should you do? Pull the trigger. And if your rules say, I don't have what I'm looking for, what should you do? You should wait until your rules say, pull the trigger. Morgan Stanley, add it to the list of financials doing the same pattern. Are you seeing it now? There's the lows. Here's our consolidative pattern coming down. Pretty easy to map. I'm fine if I leave a little piece of it out. And then you can see that clearly this is a bigger thing that the buyers have done than they had done since this. And it's about the same size. So now that the buyers did that, did they have any volume? Yeah, they had a couple of chunks of volume. Um, and then what? Now we see it pull back and we say, look, the sellers are starting to run out of steam, average, less than average volume. And we're saying that this looks like this could materialize. I kind of feel like Morgan's the best of them. Anyone want to weigh in? And then that's what we're looking for. And then it makes a run back up into this area. And we say that's the trade. That's what when if you were to go back and you were to take this trend back here on the left, great looking trend. If you went back and found the place where this trend started, guess what it would likely look like? It would probably look exactly like there was a consolidation and then it went through this reversal pattern and then it started. So, yeah, that's what we're looking for. Microsoft, no. Micron, too much. Too much. Netflix, maybe holding on. Yeah, Goldman and Morgan are pretty lockstep. You'll find the volume and the options are quite similar as well, actually. Though not always. John Deere and Caterpillar used to be the same way, but they've had a divergence, you know. Nvidia's down, Palantir's down. Now you can see Palantir looked like it wanted. It's like, hey, we were down here, tried to make the reversal, failed. I saw that across all levels of commission or all levels of subscription, Bob. They're just like, we have enough people that, even if we have 10% cancel, it's a numbers game. They're like, you know what? The numbers say it's time to go. Bam. What will Powell say? I think that the more we hear Fed speak, the more we hear the Feds speak, the more we're going to realize they're not they're not going to help us. We're in this thing. The market's going to have to stand alone this year, at least as of now. Maybe if employment really starts to get worse at a faster rate than inflation is, then maybe we'll see a rate reaction. But I think, yeah, more nothing. Gabe, I agree with that. Rocket Lab down. Raw Stores down. Raw Stores looks okay. That's on my list. The options aren't great, but I made money on the last one of these that I did, even though the options weren't great. So there you go. But if it goes bad, it'll be worse. So, eyes wide open. RTX, no. Silver, no. SNDK, I still think is viable. There's three of these: SNDK, STX, WDC. I think these digital stores still have bullish momentum. Eventually, I think they're going to have a downside reckoning potentially. I don't know if whatever they're doing is justifying these huge surges, but not yet. The momentum's still there, still making higher highs, higher lows. Here's the market. Seems to have stabilized, but not much else. I don't really see a shift yet, just kind of back and forth. STX is in there as well. Oh man, I'm telling you, we were looking at this one too. We were talking about this one for a put. We were like, I'm kind of feeling like this thing is looking to roll over again. We were thinking about that one for today. There's got to be some news behind this one. What did they do? Food poison somebody? There's got to be something there, right? That would have been quite the little hit for us. I'm a little disappointed because that one was on the docket right there. Hadn't really given the signal yet. That's the thing, right? Is on this day it was close, but it was like, I guess maybe no, that's what it started to pinch, but it hadn't turned. That's what it looked like right there. You can't see. Yeah, like that. Pinching, but not turning quite yet. Anyways, interesting. TJX. Sideways, Tesla down. Following the announcement of a $29 billion deal to acquire Jetro Restaurant Depot, the market reacted negatively to the massive debt required. Yeah, interesting. Interesting. Long-term play, I guess. Is Jetro Restaurant Depot publicly traded? TSM. UPS is trying to fight forward a little bit. Come on, UPS. Get back down, you dirty rat. Vale is up a little bit. Viking down. How's the VIX look today? It's holding on. We need to see we're clearly at an escalated it escalated to an elevated level. VOD, WDC still trying, maybe. Walmart flat. Yeah. There you go. Well, nice job. Make sure you manage those. Anything I missed? Publicly. It's privately held. That makes sense. Well, it's good to see everybody this morning. Again, don't forget it's a short week. There will be a schedule adjustment. We are not going to have Monday session or Friday sessions. We will add a Friday. We will add a Friday session at the last hour of the day to the calendar. So make sure you're planning your no Friday at 3 p.m. It'll be Thursday at 3 p.m. because the market is closed on Friday. Great discussion today, you guys. This is exactly the kind of stuff that really will help us get where we're looking with our own individual progress. Thanks, guys. Have a great rest of your day. As always, happy trading.